going. It's 5:03, so we will.
I'm just switching things because I was having trouble getting on, so I'll try to get on either one.
Okay. So good afternoon, good evening, everyone. It's the September 26th meeting of the Town Council's Finance Committee, and we will get underway. We are joined by Councilor Shuren. As a reminder, all these meetings are open to anybody on the council, so folks are free to join us. The first item on our agenda is the opportunity for the public to address the council. I don't see anybody here for that, so I will declare that closed. In the second, then the first item on our agenda is the presentation of the FY22 audit.
Yep, Vanessa Rosito is here with us via Zoom. She was the audit partner on the engagement, and she's going to do a brief presentation of the fiscal year 22 results.
Great, thank you, Amanda. Do I have the power to share my screen?
I'm hoping so.
Okay.
Take a stab at it, and if you don't, we'll work on fixing that.
Okay, so I'm going to share my screen. I have a PowerPoint presentation. If you all have questions, you could ask them during the presentation, just try to get my attention or wait to the end. It's up to you. I'll leave it up to you. So let's see if this works. It's not the one I want. It's this one. Share. And then I do this. Can you see the presentation? Yes.
Yes.
Okay. Okay, great. Thank you. All right. So our little disclaimer there. Can you hear me okay? Okay.
I can.
Okay, thanks.
Yeah.
As far as the agenda, I'm going to go over the terms of the engagement. I'll go over an executive summary of the results, some high-level financial highlights that I think might be of interest to everyone. I'll talk about the federal single audit and then the state single audit, and then go over the governance communication, and then I'm going to end with upcoming GASB pronouncements for the next couple of years. So as far as the terms of the engagement, CLA was hired to express opinions on whether the basic financial statements are presented in accordance with generally accepted accounting principles. We also express an in relation to opinion on the schedule of expenditures of federal awards, which is the federal single audit, and the schedule of expenditures of state financial assistance, which is the state single audit.
You mentioned, Vanessa, it's okay to stop you and ask questions. Can you just
go ahead.
Can you put that in English? And I don't mean to be facetious. What does that mean? Express and in relation to opinion.
So we say in our opinion, so we issue a financial statement audit, and then there's two other deliverables, a federal single audit and a state single audit. So we say that the schedule of grants spent, that's really what this means, is fairly stated in relation to the financial statements.
Okay, thank you.
We express an opinion on the compliance of the federal award programs and the state award programs that we test in the federal and state single audit. We provide a report on internal control over financial reporting, and then a report on internal control over compliance in the federal and the state single audit. So as far as the results, we've issued an unmodified opinion, which is a clean opinion on your financial statements. It's the highest form of an opinion that you can receive. It means that everything in your financial statements is fairly stated in accordance with our accounting standards. And there were no internal control findings related to the financial statements.
And that means that there were no issues where you saw internal controls were not adequate?
That's correct.
Okay,
Yep.
thank you.
For the federal single audit results, we tested one program, which I'll go over in a little bit more detail later in the presentation. We also issued a clean opinion on that program, and we did not have any compliance findings or significant deficiencies in that program. Similarly, for the state single audit, the various programs that we tested, again, I'll go into more detail later. We issued a clean opinion on those programs, and again, no findings. So clean audit all over for the financial statement, federal single audit, and state single audit. So all good news there. As far as the financial highlights, so these charts, if you will, are located in your financial statement in the management's discussion and analysis. It's just like I said, a kind of a treetop view of your financial statements. So what is presented here is your governmental activities in the first two columns, and then your business type activities in the second two columns. So your governmental activities are the general fund and special revenue funds aggregated together. Your business type activities are your sewer and solid waste operations. So just
Does recreation go in there?
so recreation is governmental activity.
Okay.
Yep. So just looking from 21 to 22, again, very high level, you will see that your current assets increased quite a bit from 33 million to 66 million. And that's really kind of all these big changes, if you will, from last year to this year that I'm going to talk about is due to the elementary school construction, because you've issued bond anticipation notes, which means that you have $11 million of cash that you didn't have last year. You issued a $15 million bond. Granted, you spent some of those monies, but a majority of them are still in the numbers at June 30th, 2022. In addition, the capital assets increased from 95 million to 123 million. That's because of the construction in progress for the elementary school. Similarly, for the long-term liabilities, like I said, you issued $15 million of new bond money. So that is increasing your long-term liabilities. And just, numerous payables, if you will, with respect to the school construction.
So you said 15 million, but it's going from 29 to 37. So it went down in other ways?
There's more things included in long-term liabilities. So I'm just kind of
that's fine. Thank you. Yeah.
Big items, right. So your net position from last year to this year did increase from 95 million to 120 million in the governmental activities. Really nothing to note in business type activities. Things are pretty consistent with last year. So there's really nothing, no outliers to discuss with you there. What I chose to present here are the results of your major governmental funds. So your general fund, your debt service fund, and your capital projects fund. All of the smaller funds of the government, if you will, are aggregated together into this fourth column entitled non-major governmental funds. So I'm just going to sort of concentrate on the results from last year to this year, which is on the bottom of the page. So the general fund had an increase in fund balance of 987 million from last year to this year. Debt service fund had an increase of 569 million. You did record the.
Do you really mean 569 million? And I'm not seeing.
Sorry, did I say million? I meant thousand. I'm sorry. I misspoke. 569,000 from last year to this year. And the majority of that, I would say, is the bond premium, because you did issue in the next column, you'll see issuance of debt of $15 million. but the premium was recorded in the debt service fund. So that's probably why you had an increase in fund balance of 569 million. In the capital projects fund, you had an increase in fund balance.
I'm sorry, Vanessa, you did it again, and that's okay, but the 569 million you said, but are you able to use your cursor while you're talking about
Sure.
these? Thank you.
So in the capital projects fund, you'll see that the results show an increase of 458,000 from last year to this year. You did issue debt of $15 million. So in governmental accounting, when you issue debt, it's actually recorded as revenue. You also did receive grants of $11 million, and you'll see the large capital outlay of almost $32 million. In the fourth column, non-major governmental funds, you did have an increase in fund balance of $1.4 million from last year to this year. So overall, in the governmental funds, you had an increase of about $3.5 million from last year to this year. Some other things I thought you'd be interested in, property tax collections in fiscal 2022 were 98.88% compared to 98.78% in 2021. So a little bit of a increase there. Your general fund, on a budgetary basis, your general fund revenues came in 845,000 greater than budget, and your expenditures were 38,000 less than budget. So all good results there. You are in the state of Connecticut MERS pension plan. So you do have a net pension liability of 11.9 million. That plan is 82.59% funded. And you also have a net OPEB liability. OPEB is other post-employment benefits. These are benefits that you're paying to your retirees, health insurance, and other sorts of benefits besides pension. That net liability is 1.1 million, and that's 64.10% funded.
Vanessa, on those two numbers, are those reasonable percentages? Are they under? Are they over? How does it strike you?
It's hard to just look at one attribute of a town. You know, there is a rule of thumb out there, and I don't know what the genesis of this was, but that a pension should be at least 80% funded. Now, you're in the state plan, so you don't really have any control over it because that's how much the entire plan is funded. I would say the OPEB plan, I rarely see, I mean, usually OPEB plans are not that well funded. So I would say this is a respectable percentage.
And what is the risk if it's not funded?
You're setting aside assets to pay for retirees' benefits in the future. So you're getting the positive, discount rate for investing those funds to pay for this liability. I think rating agencies like to see that you are funding this. But again, it's actually probably a better conversation with your rating agencies than your auditor.
Okay, but I do still have one more question. Is just the 82%, is that based on figuring out currently what we would be projected to owe?
So the 82% is based upon the present value of the liability. So it's the liability of everyone in the plan, all the current employees in the plan now, what projected their liability is going to be in the future, and all the retirees. So it's all of that compared to the amount of assets in the plan valued at June 30th, 2022. The asset valuation can be a little volatile because the value as of June 30th, 2022. So it has a little bit of a market effect on it. Also, I should add that it's really not 2022 because the MERS plan is valued in arrears. So it was actually as of 2021.
Okay, thank you for that.
Nothing that town has any control over whatsoever.
Right.
Yeah.
It is much better funded than the state employees' retirement or the state teachers' retirement, however.
I believe you're right. Yes. All right, on to the federal single audit. The town spent $2.7 million of federal grants. You had one major program, which was the child nutrition cluster. As I stated before, we issued a clean opinion over the compliance over this program, and we did not have any internal control findings. And then for the state single audit, the town spent $36.2 million. There were 3 programs that were tested as major: Town Aid Road, Early Care and Education, and Payment in Lieu of Taxes. Again, clean opinion on the compliance of these 3 programs and no internal control findings. We do have a required communication from us to those charged with governance, which is this committee. We're required to communicate a number of things. So I just sort of summarize them on these 2 slides. We did adopt GASB 87, the new lease standard. So that is in your financial statements this year. Every financial statement has estimates in it. So we're required to look at these estimates a little bit more closely, because theoretically management could estimate something a little higher or a little lower to, again, theoretically play with the results of the year. So your estimates are the useful lives of capital assets, which are used to calculate depreciation expense. The net pension liability and the net OPEB liability, those amounts are calculated by an actuary based upon management's various, discount rate and other items that could skew it up or down. Allowance for doubtful accounts, that's based upon historical information of the collectability of the receivables. Medical claims for your health insurance, those are claims incurred but not reported. So you do utilize a third party to estimate that for you. Also, you do utilize a third party to estimate the landfill closure liability, which we looked at all of these estimates and we did not find any management bias in any way. We did not have any disagreements with management. Management did not consult with another accountant for like a second opinion on something. We didn't have any difficulties in performing the audit other than, as you know, there was turnover in the finance department, so the audit was delayed. We didn't have any uncorrected misstatements, and we are independent of the town. And then these next 2 slides list out the new standards that the GASB has promulgated for 2023 and 2024. Most of them are not going to apply to you. I'll just go through them quickly. So conduit debt has to do with if you're issuing debt for another entity, you do not have any exposure there. Public-private or public-public partnerships, as far as we know, you do not have any of these arrangements. Statement 96, we are actually starting to work on now. So this is very similar to the lease standard. This has to do with subscription-based IT arrangements. So any software subscriptions that you have would theoretically have to be capitalized and a liability recorded. What we're finding with our clients is a lot of these agreements are 12 months or less, and they do not fall within the standards. So let's hope that that is the case for this year. Statement 99, there's a couple items that apply in 23, and then you'll see on the next slide, a couple items that apply in 24. This is just clarifying various standards that were issued in the past, so really nothing to worry about there. Accounting changes and error corrections, just a little bit more direction from the GASB on how to present these if you have these items. And then compensated absences, I really don't think there's going to be a big impact here. It's just maybe clarifying some things that various communities weren't doing the same. And that's it. I'll open it up to questions either on the presentation or if you have any other questions on the financial statements or deliverables.
So high level, I guess I'm jumping in because we're talking about FY 23, but obviously collectively we want to make some dramatic improvement on the timeline, the timeliness of completing our next audit. So our finance director, Amanda, has laid out her belief that we should be able to be filing by the January-February timeframe for the upcoming audit. So just at a high level, based on the timeline that we would be initiating the process in the near future, do you feel comfortable with us making that level of improvement year over year?
Yes, as you know, there's 3 entities that are audited by us, so we do not have any worries that the health district in Region 19 will be filed on time. And then we'll start Mansfield right away. So we're hoping for January, February, not this late again.
In terms of process, so this is obviously a great audit. I didn't hear anything that whatsoever that you found that is concerning, and so that's good, especially given that we've switched financial systems and had a significant amount of staff turnover over the last few years. So that's very good to hear. We have sort of now received this. I don't know that there's a motion to accept it necessarily from this committee, and we'll report it out to the town council. Is there anything else that we need to do as a committee about this audit to approve it, or does the council need to get a full presentation or anything like that? Or is it really just that this committee hears from you, and if there are no issues, which it sounds like there aren't any, we can sort of move forward? I don't think I've received a copy of the audit.
A paper copy we do not have yet.
Yeah, so when we get paper
available
copies, traditionally the council
Yep.
everyone on the council gets a copy and can review it. But other than that, I'm just curious if that's it in terms of process for us.
This has got his hand up.
And if I could ask a question?
Let me try to get an answer to my question first.
Right, yeah.
Go for it.
Are you asking me? I'm sorry.
Or staff, either one.
So I guess the question on the floor is, should the finance committee make some sort of an affirmative action to accept the audit prior to any council level action?
I believe the answer is yes.
Is there any reason not to?
Yeah, I was gonna say, I mean, I don't think, in my opinion, any harm in doing it, especially when it's a needed step. I feel like we have in the past.
Yes, we
Sorry,
would
recollection.
recommend acceptance of the.
Yeah, my
annual
recollection is
financial
this
report.
motion comes from to recommend acceptance, and then it's on our consent agenda. for-
Similar to like the quarterly financials.
Yes.
Mhm.
You want to hear Chris's question first?
Yeah, Chris, why don't you go ahead?
Vanessa, I wonder if you could just comment on any trends you may have seen that were or are positive or concerning, or you're just generally glad to see. General observations about the whole picture.
I mean, I don't really, it's not something that we look at as far as trends. You know, I think that it's a testament to the controls of the town and some loyal former employees that the, audit was done, that there was no findings, because I think it could have been a lot worse. We're seeing more grants from ARPA. So I guess that could be a trend, but as far as I don't know what,
Thinking something specific to Mansfield, if you see something where, holy mackerel, this account looks out of line, or it's really headed in the wrong direction relative to what we've seen in other towns or whatever, you get a better view than we do, even than Amanda would have, because you, I imagine, do other municipalities, and you can see what things might get towns into trouble over a period of time. So I'm just curious about your general observations with ours. I'm glad you found our staff present and past to be helpful and organized and get things to you. But I'm really curious if you have, or really not if you, but what observations you have generally.
I mean, the results were positive. From last year to this year, you gave something back to fund balance. So I don't know what else.
That's great. That's the kind of thing I mean. So that's something you would like to see in any given town, is you'd like to see the fund balance grow.
Yeah, and the budget, the revenues came in more than you budgeted, the expenditures came in less than budgeted. And again, it's, a testament to the town that things were still running as they should be, even when the finance department was in a bit of an upheaval. So I think that's great.
Thank you.
Okay.
So I think we need to have the audit before we can move to recommend its approval to the council. So when we get, maybe at our next meeting, just put that on the agenda as an agenda item. We don't need, Vanessa, we don't need you to come back.
It is on tonight's agenda with the attachments.
I don't
It's
have,
electronic in the council
It's
agenda.
only in the council agenda
Oh.
because it couldn't attach to the finance agenda.
It is, yeah, it is all there.
I've seen it in I went through the thing. There's a lot of numbers, Vanessa and Amanda, lots of numbers and columns.
These aren't bound copies.
okay, well then if that's the case, then it's fine to recommend its approval tonight, so we can do that. I didn't have the packet in front of me yet.
It's 2022, is that the
Yeah.
number? So I move to recommend to the town council the acceptance of the 2022 audit.
Is there a second? If not, I will second. Is there any discussion? All right, then let's vote. All in favor of recommending to the town council?
Aye.
Your hand. Okay, our next item on our agenda is staff reports. Are there any staff reports? No, okay,
Thank you, Vanessa.
Thank you, Vanessa.
thank you.
Thank you, Amanda, very much.
Can I make a comment about audit reports?
Yes,
We have asked auditors in the past for the kinds of questions that Chris, you've asked. And auditors are extremely unwilling to step aside from the confines of the rules that they are required to follow. So we won't get that kind of generalized, and the fact that she made the comments she made was truly unusual.
Good, we'll try to keep it unusual. I think it's because
It's actually not within their purview, and there is a real professional limitation on making those comments.
I get it. I just feel like they do have an unusual view of multiple towns, and they can see where towns do get into trouble, and you can imagine at their little professional meetings how they may be commenting about one town and another and seeing how things are going. And if we can get any of that insight, I think it's worthwhile. I hear you, and I understand they don't want. I got that vibe, but at the same time, it sure would be worthwhile, just as it was worthwhile to hear even what you did say.
A number of years ago, after the Baruzzi disaster, we hired, I don't even remember what firm it was, but we hired a firm to help us create new controls, finance controls, and they did an extraordinarily thorough study of all of our financial rules and policies, instituted so many new controls, we actually had to hire extra people in order to have a third signature on checks and so on. So, those of us who've been on the council through that disaster, are familiar with the fact that we have done we've jumped through all kinds of hoops to make sure that the expenditures are carefully controlled, both at the town end, at the Board of Ed, and the region end and Eastern Highlands end, so.
Andy, can you comment on the over budget income revenue? It seemed to me building permits was a big piece of it.
Chris, we've got a,
Oh, we've got this thing on the table now? Is that what's happening?
no, we already voted on the audit, but we're getting to the.
Okay, pardon me. Okay, Ben.
We'll get there. Approval of minutes is next on our agenda from the June 12th meeting. Is there a motion to approve the minutes?
So moved.
Is there a second? I will second. Chris, I don't think was here yet for those.
No, I
minutes.
will abstain.
Chris abstains. All in favor, raise your hand. They pass. Okay, we don't have any old business tonight, so moving on to new business. We have a lot of cleanup for the end of the fiscal year, most of which we do, all of which we do regularly at the end of every quarter, and this one being the quarter that follows the end of the fiscal year is always a big one. This year in particular, when we get down to number 7, you will see that we have experienced a atypical significant budget surplus. And we're gonna have a discussion about what potentially we might do with what is in excess of $4 million of surplus, both revenue and increased revenue and lowered expenses. So we'll start with the financial statements, and I will sort of turn things over to Amanda but can you, since we've got some new folks on the committee and Ron's here, can you take a minute to sort of explain from an accounting perspective what each of these things are and why we're doing them and what they sort of represent, and then also obviously what ours say and what some highlights from them as we go, especially through the financial statements and other things.
So the first few pages are a summary highlight of what is contained in this document, and then it really goes through each fund individually. So in terms of my summary, it starts with the general fund, and as Ben mentioned, we had a rather volatile year this year. We're looking at revenues in excess of 4.2 million from what we budgeted, and expenditures coming in under by around 1.1 million. I will save that really till we get to item 7. The discussion then goes through each of the funds, and each of these funds are presented in order following the narrative. And for each fund, you'll see the balance sheet, which will show the assets and liabilities of the fund, as well as the P&L, which is the revenues and expenditures for the year. Some highlights from the smaller funds. Recreation did end up with a deficit at the end of the year. So we will have to address that going forward in terms of either the general fund providing them more money or kind of relooking at some of their programming. And I know we are doing the master facilities plan right now, so that could be included in that. I did add 2 new reports this month, which are the ARPA reports. I thought it was good for this committee to have a more up-to-date summary, both financially and project-wise, of how the ARPA funds are going. And then health insurance did decrease almost $1 million, which is a lot, but we are still at, our fund balance is still about 30% of our annual claims, which is where it should be, 25 to 30%. So our fund balance in that fund is still sufficient. And after the narrative, as I mentioned, each page is the balance sheet and then P&L for each of the funds that were included in the summary.
And then can I ask a question? In her comments on the new rules and regulations, Vanessa said that the one on public to public and public to private partnerships would not apply to us. But we have the Mansfield Downtown Partnership and we have help shared services. So I'm wondering, why doesn't it apply to us?
The Mansfield Downtown Partnership is actually already included in our financial statements and in our audit as one of our funds. So that's already incorporated into our audit, and Eastern Highland is its own nonprofit, and that agreement that we have with them for shared services wouldn't be applicable for this.
Okay.
For that, GASB.
I just wondered
Nope.
whether there but you've obviously.
Yes,
looked
we
at-
did look at that, yes.
Okay.
Thank you.
So if we manage the downtown partnership differently, right now it would not. Before this new standard, it might not fall under our audit, but we manage it the same way that we manage all the other
Yeah.
funding, so it's already audited. Makes sense.
That's the advantage of shared services.
Yes.
So if it's okay with the committee. Obviously, there's a big elephant in the room, which is this huge surplus, but since we're gonna talk about it on its own agenda item. Outside of that issue, are there anything in each of the various funds that you want to highlight in specific that we should take a look at? There's a lot of them and they all seem to me to have experiencing sort of relatively normally, but are there things that you would
No, the
highlight?
ones I just mentioned, really, the rec fund, having the deficit, the loss in the health insurance fund really stood out. Everything else was operating as I would have expected to see.
Anybody have any questions?
Yeah. And you mentioned, I'm sorry, Amanda, you mentioned the health fund, but then you said it was in good shape, so. Why did you mention it if it's in good shape?
I wouldn't have expected to see $1 million loss. That's a very large loss.
Okay, you did mention that in the report, yes, okay.
But
And
luckily
is-
we do have the balance, so that worked out.
Is there any indication that that's a trend that would continue into next year?
Yes, absolutely. We had our first renewal meeting recently and we're looking at an increase in rates of 14%, I believe was mentioned at the last meeting. So our claims are trending on the higher side. And we'll include that when we do the fiscal year 25 budgeting.
Excuse me, may I just ask a question? Does that encompass the board as well as the town?
Yes.
And is some of that revenue in that account deducted from employee pay?
Yes, absolutely.
How much of what percentage of it?
Depends on the bargaining unit.
In
Okay.
the neighborhood of 20%, depending on the bargaining unit and the plan we're talking about.
But that entire is funded by employee pay, correct? Like the amount of their pay that goes into it depends on the bargaining unit, but the balance of that fund is. That fund exists because employees pay us for a portion of their health care.
There's a town portion as well.
I think all the money.
So are we simply able to say, hey, the price of this program went up, therefore your deduction goes up? And so the town doesn't have to find money elsewhere.
Well, so we have this fund, so we don't have to do that when there's volatility in the health insurance market. We keep a fund that is funded at a significant amount. And we're able to sustain $1 million loss in the fund because we funded it way higher than 20 or 30%. So
And
that
then we can repay it through deductions from paychecks.
as we renegotiate
Mhm.
labor agreements and other things and can slowly maybe make inroads into that. The fund exists to help employees defray the cost of health insurance, which can fluctuate because we're
Gotcha, yeah.
insurance. When we have a bad claims year, our insurance rates go way up. That's actually my question. Last time we had a big deduction like this was because we had a particularly bad claims year, and the next year our renewals were way higher, but then we had a normal or a fine or a less than bad claims year and everything sort of went back down to normal. And so is that what happened this year, or is this just because?
I
there's
don't
been
believe
significant
so. We have
increases?
our top few high claimants have ongoing medical issues that I do not see being resolved in the near future.
So, but this is.
A lot of it's pharmacy, actually.
It's a result of claims, it's not a result of. Insurance has just gone up
Correct.
such that we would need to think about. A dramatic change to how our. How our
Insurance
health
has-
is funded.
Gone up, I think it's on a, you're coming on a proportionate basis, what's like the largest factor driving the cost of you're seeing claims right now.
Mhm.
So
There were a couple of years in which there was a year in which we came close to the minimum. And then we have overfunded it for quite a while. And then in the past year or so, we have tried to keep costs for employees relatively low, knowing that that would call on more use of this fund and that the balance would drop. But we didn't expect $1 million drop,
No, we didn't.
and we'll have to address that for next year.
Yes.
it should also be noted or council can be reminded that for FY 24, we did not budget for any use of the fund to offset the premium rise for employees, if memory serves correct. I don't remember what the percentage is, but whereas in like the year prior, FY 23, I think we kind of split the baby. It was like gonna be 12%. It was like 6 and 6 or something. Whatever the percentage was, I'll say it's 10 or 11 or 12%. That's being totally passed on to the employees. So there's no subsidy from the health insurance fund in 24.
Yeah, the bargaining unit said a percentage of the cost of the insurance, so if the insurance goes up, the amount that comes out of an employee's paycheck goes up.
Ron, did you have a question?
No, I was just on this, trying to understand, if the cost goes up, the employee pays an additional amount, as does the town.
As does the town.
Yes.
Other questions on the financial statements?
By the way, the MERS contribution is equivalent. That is, the reason it's funded at 82% is that the state tells the towns what percent, how much they have to pay, and the towns have no choice but to pay it.
Okay,
State where the legislature can decide it's not going to pay it. But for state employees or teachers. So it's been better funded than anything else because they have made the towns pay all along. And there have been years when the cost to the town went up 11%. Employees are paying a very small percentage of the cost by statute. And although that has changed a little bit in the past year, but still, as the cost of the town goes up, some of that comes, the 2.5% will increase too, as
So-
well as with their
Yeah,
salaries.
2.25% from the employee has not hit it yet, but will level off at 5.25%. So we'll have more than double the employee contribution rate to try to. improve
Over a period of
financials.
5
There's been
years.
0.5% annually phased in, so, yeah, so I guess 6 years to get to 3%.
Other questions on the financial statements? All right, if not, then can we move to recommend their approval to the town council?
So moved.
Is there a second? I will second again. Is there any discussion? All right, then let's vote. All in favor, raise your hand. Okay, that passes. The next item on the agenda is the proposed year-end transfers.
So this is a thing we do annually at year end, just to move money around for any lines that have gone over budget. We had a handful, legislative and town attorney were both over $5,000 each due to additional legal costs that were incurred during the year. For human resources, we were short $10,000, and that was due to additional temporary payroll included during the year for temporary staff that we brought back during the HR finance transition. Fire and EMS services was over $110,000 due to overtime based on staffing levels. Public Works equipment, we had to hire some outside engineering work, so that was short $40,000. Equipment maintenance was due to increased cost, and planning and development, this consulting service line was over, and is a direct correlation to the general fund revenue, which is consultant fee reimbursement. We had a lot of large projects going on this year that required review by planning and development. The transfer proposes to take the $295,000 out of contingency. We have $687,000 in contingency now based on the salary transfers that were done in January. So we have plenty of money to fund these. And I will take questions.
can you just tell us what page that's on the report? I did see them, but I can't see it quickly in the summary.
It's page 70 in the finance packet, page 70 of 76.
Thank you.
Any other questions? Chris, I can give you a minute to check it. Look at that.
Yeah. No, okay, thank you. I just wanted to review it.
Yeah, go ahead, Tony.
No, never mind.
Is this gonna be that whole thing with the bucket loader movement money?
Next,
Is this something different?
this is separate. This is
Okay,
operating.
thank you.
So I make a motion.
Yes,
Move effective September 26, 2023, to recommend to the town council to approve the fiscal year 22-23 year-end budget transfers as presented by the Director of Finance in her correspondence, September 14, 2023.
is there a second? If not, I will second. Any discussion?
I have a question.
Yes.
Under legislative, it says increase $5,000 and then it says decreases due additional.
Should
leave.
be
Should be
increased,
increased.
sorry. Thank you.
Any other discussion? All right, then let's vote. All in favor, raise your hand. It passes unanimously. All right, the next item on the agenda is the proposed capital improvement program adjustments. We don't have page numbers in the finance packets, but it's the next.
72.
It's the next thing down. So, Amanda, can you explain what we're proposing to do here?
Sure.
or others?
Back in June, Public Works came and we requested to the council to move $125,000 from large dump to bucket loader, so the bucket loader could be purchased sooner. Now that fiscal year 24 has started, we need the bucket loader to repay the large dump. And we have the following items which you would like to appropriate that money for. The large dump came a little bit in under budget, and there were a few other projects that did need additional appropriations, so we were able to allocate that $125,000 to those programs.
So did you say that we already bought the bucket loader last
Yeah,
year?
yeah.
Okay.
Yes. And the council had transferred that money in June
Right.
to allow that to happen.
Trying to sneak in before the pricing
Yeah.
went up.
And I'm under the assumption that for most of these items, we're funding a portion of their purchase with this.
Yes.
Medium dump truck is obviously much more than $16,000.
Yeah,
So we, over a period of years, build up enough funds to buy the next one when we need it.
Mhm.
And same with the skid steer,
And if
the
you-
truck and everything
It's
else.
either that or there's a couple of them that came in over what we had expected, and since the large drum came in a little bit under what we expected, we were able to fund the ones that we needed to fund.
You're also proposing moving the vehicle replacement.
Yes, DPW has requested, based on a second review of their current fleet, they do not think that they need to replace the fleet vehicle for general government at this time. They need to focus on replacing one of the fleet vehicles for DPW.
Oh, okay, I got it.
I'll make a motion.
Is there any other questions?
Yeah, part of this is I can't quite hear everything and part of it's my newness to it. But as I understand it, this is money that we are setting aside year by year by year in the future purchase of a large dump truck. Is that right? That kind of thing, or a medium dump truck? Is that what's actually going on? Are we,
so basically what this is doing, Chris, is that within the town's approved capital budget for the current fiscal year that we're in, FY 24, the fiscal year that started July 1st. The funds that were available to fund different items, there's some transfer of dollars within those buckets. I probably shouldn't say buckets because there's a bucket. But the idea is that, you know, a couple things there where there's savings, a couple things we know we're gonna need more. It's all budget neutral, as Amanda said. There's basically 3 areas of savings here: bucket loader, and then the fleet vehicle replacement for general government and drainage crew equipment. Those are basically providing the funds.
that, I guess that's the starting point that I don't understand really. The bucket loader. Did we buy, it sounded like the answer to Tony's question was yes, indeed, we bought a bucket loader.
We bought the bucket loader in fiscal year 23 based on a
Okay.
transfer that we had done. And then in the 24 budget, we have $125,000 available for the bucket loader. We don't need it for that any longer since we've already made that purchase. So we're reducing the bucket loader's fiscal year 24 budget and allocating it to different projects.
We got it.
Thank you, Amanda. Thank you. I understand. I approve of this message. That's great.
Now, next question. With these transfers, will we be able to buy any of these vehicles in the current year?
We're going to be doing the fleet replacement vehicle, and I believe the large dump, this is enough to finish the purchase on that.
Okay, so most of our large purchases are estimated up to 5 years in
Yep.
advance with appropriate. So there are, for some of these things, there are already piles of
Yep.
money
Yes.
in the account.
Mhm.
Yeah,
And
now,
how do we determine what vehicles are purchased?
how do we-
In other words, I'm thinking, are we buying, do we talk to efficiency people? Do we just say, oh, that looks like a good deal, I saw a good ad? I mean, how do we assess this, and how do we decide what the best vehicle is for the town of Mansfield?
you want to explain how the state contract works for things that are kind of off the shelf?
Yeah, we do rely on the state contract a lot, which they've already pre-bid out various vendors for us to purchase the equipment from. And then in terms of which vehicles we're replacing, we rely on Public Works to maintain our fleet and determine the best use for the vehicles that we.
Do they maintain the entire fleet, whether it's building department or health department? Do we do those too?
I'm not sure what health department does. I don't think they're.
I don't think we do health department.
I don't know
Fire
if-
does their own.
Yeah, fire has a separate contract, I was gonna say, so just.
Okay.
Fire and emergency service vehicles are not handled by DPW, but DPW. All general government and public works vehicles, DPW, equipment maintenance folks, mechanics, maintain.
Animal control, that goes through the state as well?
Well, yeah, so I mean, in terms of,
What's the state contract?
so,
Okay.
Can you explain what that is?
do I explain the state contract?
They buy cars, they have the ability to buy cars at a specific rate, or vehicles, right?
Well, they go out to bid with several different agencies and locate the best bid option, and then the towns are allowed to purchase through the state's bid.
So there would be like multiple, like for Ford, there would be multiple dealerships that have agreed to provide the vehicles at this contracted price, so you're getting kind of like bulk discount, and whether you use, this dealership or that dealership, you're gonna pay the same off the contract.
Mhm.
But for really customized vehicles, like a fire apparatus, there's not a state contract for that because these are very customized to meet.
Yeah, and there are not that many purchased.
Go out to bid with very specific specifications for that.
And Public Works also does a very good job of maintaining vehicles, so we have 20-year-old vehicles all over town.
Excellent.
Maintenance, extended useful life.
Other questions? All right, then Terry, you can make the motion.
Move effective September 26, 2023, to recommend the town council approve the adjustments to the capital projects fund as presented by the interim director of finance in her correspondence dated August 7th, 2023.
Second?
I'll second it.
Okay, is there any other discussion on it? All right, then let's vote. All in favor, raise your hand. Passes. All right,
I'm sorry, Ben, I did actually have a discussion item, but it's really, again, a question. The $125,000 that went to the bucket loader that now appears to be available because it wasn't spent in 2024 and it was spent in 2023. Where did it come from in the 2023 budget?
Truck.
we were supposed
Say it again, I stepped on your,
We took it from the large dump truck and allocated it to the bucket loader, which is why the bucket loader is now
Sometimes I
repaying
feel like we're in a playground.
the
You took
large dump.
We were supposed to buy the dump truck last year. And instead of buying it last year.
terrific. Okay,
We flip-flopped.
thank you.
We're gonna buy at the end of one fiscal year, we bought at the beginning of the next fiscal year, and the thing we're gonna buy at the beginning of the next fiscal year, we buy at the end of the previous fiscal year to come.
All right, well, then let's move on to item number 7, which is the additional appropriations for FY 22-23. And why don't I let staff describe what's going on and where we're at and what you all recommend that we do.
Manning or over.
Sure, so at the end of every year, we evaluate our revenues and expenditures to see if we have additional monies and if we need to do any additional appropriations. This year does appear to be sort of an anomaly where we do have $4.2 million over budget in revenues and 1.1 million in expenditures. The expenditures were due to salary savings due to transitions and departures of staff and resident state trooper savings because they adjusted the benefit rate part of the way through the year. Those two are pretty straightforward. For revenues, one of the main drivers was building permits. Building permits came in $1.5, almost $1.6 million higher than anticipated. That does bring into the question, how was our budget? So I did do a comparison to show what we budgeted over the last year and the past 5 years. And then I looked at anomalies. As you'll see this year, we had one building permit that was $564,000. That is not a normal size building permit. That is not something that we would have been able to anticipate. So if you remove the anomalies, I do feel confident that the budget that we've been using for the past 6 years has been a reasonable and correct budget. It just so happens that with the amount of projects that we have going on in town right now, that we ended up with way more revenue than we had anticipated.
Can I ask you a question?
Mhm.
We know that there are at least 3 more projects on the coming down the pike. Would it make sense for us to budget for the revenues for those projects before they're actually applied?
If they don't come in fiscal year 24, then yes, fiscal year 25 budget, I think we should be looking at to make sure that we include anything that we know is coming.
Can I ask a question? The building permits are based on some assumption that there are costs to the town involved in whatever inspections and so forth. Did that increase our expenditures in that category?
It has not yet at this point, no.
But it
Because
will?
those are not
Yeah,
town projects
so-
that we don't.
Yeah, so, I mean, certainly in the fiscal year we're talking about, there was not a proportionate offsetting
Yeah.
increase. You may recall that the FY 24 budget, there was additional, part-time housing inspectors added to help free up some of the full-time people that we have there that are certified to do the building inspection piece here. Those that have kind of split duty between building and housing, they could focus more on building and have just part-time housing inspectors do the housing inspection. So there is an increase in cost. Not making a representation that this, for this year, the increase in cost is proportionate to what we saw in the previous year's increase in revenue.
But when all is said and done, do we end up making money on building permits?
So we're not supposed to,
Yeah,
but the way that the permit fee is structured, when someone builds a large multifamily development, because each of the units is the same generally, the inspection process is much simpler than if someone built 550 houses, 550 apartments all in the same building, or I'm making a number up, but the inspection process doesn't take as long. With that said, 2 things. First, we have an ordinance that allows the council to, given that we are not supposed to, as a matter of policy, make money on building permits, allows a developer to come and ask to reduce for us to reduce his permit or her permit. The developers that have paid building permits this year did not exercise that option, so they decided to just pay the permit and didn't ask us to reduce it. My recollection is Meadowbrook came to us in their 3rd phase, the most recent phase on Frontage Road, and asked for a reduction over in the last couple of years, and we declined because they had declined to build affordable housing. They weren't required to. They got in right before the regs changed. And so we said, no, thank you. And then prior to that, the downtown requested the reduction and we granted it. And this is the sort of second part of my point, we also hired additional people to make sure that their inspections were completed in kind of an expedient way. And so I want to make sure that even though we're not at an inspection point for the facilities that have paid building fees, that we are ready to get their properties inspected at a clip that would match the fact that someone just paid us a $550,000 building fee. I just don't want to get to a point in a year that they go to open and are told, we only have 2 people, it's gonna take us 5 months to get to all your inspections, and we sort of delay their process when in effect they paid us for that service already.
And I guess just, obviously, our building and housing department is aware of all of the proposed projects that are out there. I know when we did the budget this year, I would say that Mike Minto, our director of building housing, exercised, as you'd expect from Mike, full restraint in terms of perhaps only proposing 2 additional part-time people. But I know he is looking at what the expected demands are, and I know he holds himself and his staff to the highest standards in terms of timeliness. And we saw that with the all the various inspections happening on a weekly basis with the new elementary school. And I would fully expect if Mike is concerned about the amount of workforce, the labor inputs capable of adequately and expediently addressing the work, that we'll be having conversations about that this next budget year.
And we did already hire the temporary
Yeah.
additional part-time housing inspector, and they are on board and being trained.
But to the extent, certainly, Mike understands that no one's saying that that was only a starting point, but if it needed to be a starting point, and additional staff based on the ramping that was needed, certainly we would look at it with a fresh set of eyes and consider it, but this was the staffing that the department felt that they needed to address what they knew about coming down the pipe.
They must already be inspecting it at Four Corners.
Oh, yeah, yep. All the time. Ryan, did the contractor for the school also need to pay, or because that was a public building, they don't pay? What happens there?
Building permit.
Oh, the building, yeah, this question's coming from trying to remember whether or not there was, I believe the building fees were waived for this.
I
but
think
That's what I would have thought, yeah.
The state portion, that's.
So I think that's, sort of in response to Ron, your question, that, yeah, the revenues are going to go up some years for anomalous reasons, but they're also going to be low or be high for things like municipal projects other years that the town does need to cover from some revenue source, and it seems to make sense to cover it from construction permits.
There's other items that cause revenue to increase. So let me just ask the same question about the next item, which is also related to this construction, which is fire code safety. So have we similarly made adjustments to fire marshal staff in order to accommodate whoever does those inspections? I'm guessing it's fire marshal since it's separate, maybe it's not. And we already made adjustments again to make sure that fire code inspections are.
So at the time of the last winter, when we were developing the current fiscal year budget, we had same sort of conversations with our fire marshal emergency management director, Libros, that we were having with building and housing. And at that time, there was no belief that there was going to be a need for the current fiscal year anyway to add additional staff to meet the demands of that department.
Okay. Are there other building or fire code related questions? Okay, then let's move on to the other revenue drivers and go through them, and then we can go to the next thing.
The next anomaly was interest revenue, which came in $1.6 million higher than we had expected. That really just has to do with the volatile market and us not expecting that when we did the 2023 budget. I did do a historic budget to actual just to show that there have been years where we have been under budget, and it really is just picking a number and hoping that the markets stay in line with the number that we pick. Municipal revenue sharing grant was over $510,000. The state announced in October of last year that they were able to provide an additional payment to all municipalities across the state. So we received $510,000. And then the consultant fee reimbursement was over by 119. As I mentioned before, that expense line was also over budget. And there was a correlating expenditure with that one.
That one's not clear to me. What is that consultant fee reimbursement?
So oftentimes planning and zoning will require a project to go through some sort of review or process with an engineering firm. So that's the money coming in to pay for the engineering firm. We also have a related expense to hire said engineering firm to perform the analysis for the projects.
So just to maybe elaborate on that a little bit.
Yeah,
So
please.
think of it as it's the Planning and Zoning Commission ability to retain a third party that's going to hopefully provide the Planning and Zoning Commission an objective, independent analysis. So whatever the study might be, whether it's traffic or something else, if it's big and it's complicated enough, and the commission is at all concerned that the analysis that's done by the applicant might not be thorough, complete, objective, whatever, not fully vetted, they can say we're going to basically do our own analysis and hire somebody to do that, and we're going to compare the results. And so to what Amanda was saying, the applicant pays for that. And so there's offsetting revenue. We pay it out of the general fund, but the applicant, the fees collected by the applicant replace that which we budget for and expend out of the general fund.
Huh. I'll have to keep thinking about that and ask some more questions later. But it's called a reimbursement.
Yes, they're reimbursing the costs we incurred to have the study done.
Applicants,
It's reimbursing whom?
Applicants
The town.
reimbursing the town for the costs associated with hiring a consultant to review the applicant's project.
so you'll recall from the funds discussion from the financial statements. That there's is it in the funds? Where is it?
It was in the year-end transfer memo.
It was in the transfer memo, sorry, that we are over budget in expenditure by $115,000 for this. So the town hires these consultants, we pay for them, and then the applicants are required to pay us back. And so we were,
Thank you, Ben. Okay,
we are also over budget on the revenue because they paid us back.
okay. Thank you, Ben. That's great.
All right, so that is a summary of how we have a budget surplus of is it
Well,
$5.3 million, which is in the neighborhood of 10% of our budget, significant. Most of that surplus is in, or at least half of that surplus seems like it's in pretty one-time revenue or one or two time as we experience this construction boom. So there's some additional appropriations discussed next, and so why don't you guys go over what you're recommending we do now and then what we're thinking about for next month.
So for tonight, we have identified 3 specific projects that we need additional funding for. The Hunting Lodge Road culvert, we need an additional $620,000 based on bid results. For reval, we need an additional $200,000 based on bid results, and we need $20,000 to finish the refurbishment of Squad 207. Those are the 3 specific items that we have identified that we are asking for an additional appropriation for. And then going forward, we're looking into the possibility of maybe providing some additional funding to our OPEB trust. As you noticed in the financial statement presentation, that could be funded a little better. We also have a few other capital projects that we're looking at that we're hoping to move forward. I don't know if you want to add anything.
Yeah, I think, we've shared a meeting I had with the mayor and deputy mayor last week. We talked a little bit about some of the projects, not necessarily, because this is a preliminary sort of state of analysis. I don't want to put anything out there in the public that then we may be walking back later. But
You're being recorded, Ryan.
suffice it to say that there are, as Amanda said, a handful of what I guess you could say higher dollar capital improvement projects that we think have merit and that would be certainly worthy of consideration for one-time use of one-time funds. The big thing, and I say this periodically, I guess I'll just say it again, but philosophically, you don't really want to get in the habit, if ever, of using one-time funds, one year surplus to fund ongoing operating expenses. So that's kind of code for saying it wouldn't be a good idea to fund additional positions that we feel we need out of this, because next year the surplus situation could be different. So it's really an operating budget expense. So you really want one-time funds, i.e. one-time surplus, to cover one-time expenses, i.e. specific projects.
Can I ask a question? I'm just curious. Is the culvert cost, is it 620,000 plus 425,000?
It's over $1 million.
Mhm.
Yep, so maybe just to put it all out there, it's certainly possible that we we under budgeted, based on what we thought the work was going to be when we thought it was 425,000. It is amazing what inflation, and particularly when it comes to construction and public works projects, but I'm not sitting here saying, a couple years removed from when we developed that budget, that inflation has driven that up by 100 and some odd percent. We were definitely discouraged when we got the bid results, and they were all as high as they were, and they were all, at least from the ones that seem credible, over $1 million.
So whatever is not used for any of these special one-time projects would be added to fund balance.
We have been looking
Correct.
at that as well in terms of percentages and where we would end up.
Yep,
with some
so,
of this.
so Ryan and Tony and I have discussed, I think, a large list of ideas. And the direction that Tony and I gave staff when we were at our agenda setting meeting for the council was, let's do the things that are ready because they're needed. And then there are clearly things that staff needs some more time to sort of research and come up with recommendations. And so the idea is that instead of meeting again in 3 weeks or 2 weeks before at our regular meeting on the 10th, we will again meet before the second council meeting in October. So in a month, they will have had some time. There's a lot of things under consideration, other capital needs that may be more long-term and down the road is one of them. Making some contributions to some of our funds or fund balances, OPEB liability, some of those things are other things, but I think I want to give staff time to deal with whatever is left after theoretically tonight we allocate $840,000 of it. I will say I appreciate, Amanda, that you went through and did the sort of budget analysis for permit fees. I do think we're talking about enough money that it might make sense to attempt to do some kind of forecasting for our future budgeting and not just, oh, we're gonna have another round of building fees over the next couple of years as some of these other projects theoretically move forward, but once the projects that have already started construction finish, they will start paying property taxes. And so having some sense of a 5-year outlay, even if we don't build that assumption into our budget, we could, as part of our regular budget process in the spring, set aside certain things that maybe we pull out of the town meeting budget and we say, if things go the way this outlook predicts they're gonna go, we will allocate the surplus towards these things. I say that only because I really don't love deciding how to spend $5.3 million outside of our normal budget process. It's enough. It's one thing if we have a couple $100,000 surplus, which is normally what happens, but when you're hitting 7 or 8% of the total budget, it's enough money that it feels like it's something that we should have some predictability. Like we know there's 3 or 4 more projects that are likely to come to fruition and file building permits. We know that there's X number that have already done so and the construction will begin. We know roughly when they're planning on opening. And therefore, when will they start paying property taxes?
Disclosing like a wait list sort of this.
Just, I think it probably wouldn't be the most conservative thing in the world to literally build it into the budget, like to build the future revenue to say, the standard says they're gonna open in September of 2024. And so when we set the budget to town meeting in the spring, we're gonna say, we're gonna collect 2 million more in property taxes than last year. Because a lot of things can change in that market, but at least having something for us to plan makes sense to me.
And I completely agree with you. And
Is there an important caveat there, though, since we have the ability to waive those fees? And that we should think about historically how much of them we've waived and the likelihood that we'll waive them in the future. And I also want to just throw out there on that since a lot of this building we've argued is good for the town because it eventually will help us have affordable housing, is that some of this money should go into affordable housing into the trust fund as sort of the morally right place for it to go.
Yeah,
I
that's a,
think there's a difference between recurring excesses and non-recurring excesses. The extra tax revenue we get from the standard is gonna go on forever. The building permits are only one shot. We've got 3 or 4 projects out there that may have building permits. We don't know whether their funding is going to continue to survive. So we absolutely shouldn't anticipate the excess in building permits and those kinds of things until we're absolutely certain that the buildings are gonna proceed. But I think once they are under construction, we can certainly count on the taxes.
well, my point is that not counting on the building permits and not at least planning for them means that next year, the likelihood is we're gonna have this exact same conversation with a similarly sized surplus, or at least another 2 million of building permits or something like that. And while we don't know for sure that construction will start on things, and that's why I don't think it makes sense to literally budget, nor do we know that for sure when we'll start collecting the long-term tax revenue on stuff when it opens. It would make sense, at least, I think, to have some kind of outlay during budget season, something where we say we aren't guaranteeing this, we know it could change, anything could happen. The economy could blow up and people could decide to stop building apartment buildings. But if it does, here's the list of things that we think we would like, the council would like to do, so we can have that conversation while we're considering the totality of the rest of the budget.
Yeah.
We're at
I've said it before, and I'll say it again, that I agree with you in general. I think a projection is very sensible, and to be ready for it makes sense as well.
So there's two things, maybe we have 10 or 12 minutes before the ceremony starts, but. So the first thing is, do we want to recommend these 3 items for the council tonight? And then the second thing is there any guidance that folks here have for staff as they look at planning for the remainder of the money? Terry's contribution is one that makes sense. Are there others? So why don't we start with the 3 expenditures that they've recommended here?
Make that motion.
Chris.
Can I just, I'd like to ask a question about that. I assume we've got a bid on these things. We have a bid already, but I wonder, I would like to think we would bid again, get another bid. We've waited a while. And it does seem excessive to me that the thing costs $1 million to put a bridge, a small bridge over a small stream on a small road.
Yeah, we can discuss that more at staff level at this time. I think the concern would be actually that the cost would go up if we bid it again.
I get it, but I just think it seems like a ridiculous amount of money. And other, like Scotland has just built those quick bridges. I wonder what those are like and how much they cost and how permanent they are and so forth. They might be a place to reference. But
my understanding is we've done a significant amount of engineering work here and have gone through a procurement process on the bids, and that this is and that the engineering work, part of the reason this road is still closed several years later is that the engineering work got substantially delayed. We had some issues with that contractor. The road's been closed a long time. And I'd like to see it opened. So it does seem like $1 million just seem like a lot of money for one small bridge, but.
Yeah, I mean, it's obviously bid based on the design specifications that the town came up with in coordination with the engineering firm. We would get different bid results, certainly if the design was changed. This was done. I'm not an engineer, but I know that it was done open bottom culvert with the intention of being sort of the best design standards for environmental sensitivity and aquatic wildlife passage and these sorts of things. I would just say that I don't think it would be wise to bid it back out based on the same design and just hope for a different number. I think that and given the time, I share Mr. Shakin's feedback that this project has taken longer than we all thought it would, and
yeah, no kidding.
It'll certainly suffer. The timeline will suffer if we revisit the design.
Okay. And the second one, can we talk about the second one? These have to be separate.
No, go for it.
Okay. The second one, the $200,000. This is for the revaluation of real estate in town. Is that right?
Correct.
And this honestly seems like a crazy a multiple of where we've been, of what we expected. And what we expected is it's not new work. In other words, it's not work we've never had done before. What is going on here?
So we have been saving up annually over the past 5 years for this reval, knowing that it was coming. We used around what we paid for the prior reval. The prior reval was not a full reval. It was a statistical revaluation, and the amount that was budgeted was really not a realistic amount over those past 5 years. To do a full real valuation, a full reval is a significantly larger scope of work than our last reval.
Okay. So why did we say 110 then, if we knew it was a significantly greater? You
Don't,
weren't here, Amanda, is that what it is? Is that the answer?
What Amanda's saying is that, the budget that's now set for this is not adequate to me, so the budget should.
But this isn't your number, Amanda. The 110 was never your number.
correct, that was what was saved up over the past 5 years. And again, whoever was budgeting probably looked at the last reval and said, oh, this is reasonable.
Okay, yep,
No, it was a full revaluation.
okay.
And we're required to do a full one instead of a statistical one. Every so often.
Before I leave, I want to leave very quickly. Please check section C 406 of the charter appropriations not in budget and budget transfers, which limit the percentages that we.
For transfers, yes, this is an additional appropriation. If you have revenues that came in above what you budgeted, you may appropriate anything up to the amount of the revenue that came in. It's the third item. It's A, B, and C. It's the third item.
It's the third item.
Yep.
So as a for instance,
Receipt of taxes or proceeds.
Yeah.
Other than
Other than taxes, we
taxes.
can appropriate.
Right, so the fees will do it, the debt service
Yes.
will do it.
I think the
and
motion I put
state money.
forward-
there's everything on there.
Government funding, huh?
Okay,
So the distinction though,
Right.
come up from time to time, if we just let this become fund balance, can we just appropriate? And then that would become, that
Okay.
provision you're reciting would be triggered, because now you're making a transfer out of fund balance.
got it, okay.
Okay, the last question, Squad 207,
Yes.
what is that project?
So that was the refurbishment of one of our fire trucks. They actually had an issue. It wasn't a fire department issue. It was a finance issue with encumbrances, and a few encumbrances got closed out in the prior fiscal year, and they needed additional.
Okay. All right, I would like to move that effective September 26, 2023, that we recommend to the town council to appropriate an additional $840,000 from surplus interest income received. So that's where you've said it should come from. Okay.
For a second, second by Terry, is there any other discussion? If not, let's vote on favor. Okay, it passes,
Here's one more.
one more item on our agenda, which is.
Housekeeping, just to get me to be a signer on the cemetery.
Resolution. So this is, yes, housekeeping for Amanda to be a signer. On her, is it just the cemetery fund?
Yes, this is specific to the cemetery, so they have an investment account that's
Need a
separate.
motion?
Yes,
So moved.
Okay.
What was the motion?
to designate Amanda as the authorized individual to act on the town's behalf with full power.
Oh, yes, I remember that. Yes, I'll second that. Yeah.
Any discussion? If not, we need to recommend this designation to the town council. We can't do it.
Correct, this is on consent as well. All of these, other than appropriations, they went on to.
All right, all in favor, raise your hand. All right, then that concludes our agenda for this evening. We're a special meeting, so we can't add stuff. Are there any communications, other business or future agenda items? Okay, we will discuss other appropriation ideas in October. Is October kind of the date? Like, we need to get this done at
Yes,
some
it
point, right?
needs to go to the auditor.
So it needs to go to the auditor. So what I would say is if you, and I'll say this at the full council, if there are priority areas that you think staff should think about in ways that maybe they're not yet or whatever, you should email them. Because we're gonna need to make decisions in October about how to allocate or spend the dollars. All right, with that, is there a motion to adjourn? Seconded by Chris. We are adjourned, all in favor? Cool, and we will see you at town council in a few minutes.
Thanks, Amanda.